You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the aforementioned network. You guys know how to get us. If you want to join us live, it's every Friday, noon Central, 1 p.m. Eastern via Mixlr, MIXLR. And, of course, you can get the podcast pretty much wherever you find your favorite podcast, your iTunes podcast, your Google Podcasts, our mobile app, our website, anywhere you want to go that carries audio. Chances are we're there. And if there's some weird outlet you like that we're not there, let us know. Probably not, but you never know. There could always be some obscure Estonian podcast store that doesn't carry our things, and we'll be happy to make that right. Of course, however you listen live after the fact, hit us up. Questions, comments, insights, pearls of wisdom. We do like to hear from you guys. And joining me on the old program today, before we get to our special guest here in studio, first let me welcome on my cohort here, the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com by way of Carmen Line Capital. Mr. Meatball, welcome back to the show. Where are you beaming in from today, sir?
I'm being for World Headquarters. Interestingly, I've got one of the Vol brothers coming over with family to have meatballs tonight. Although I have to say, some are turkey, some are delicious lamb, so not nearly as greasy as some of the ones I've made in the past.
Lamb meatball? I don't think I've had a lamb meatball in a while.
Oh, they're amazing.
Turkey and amazing. Lamb. No traditional meatballs in the Sebastian house, huh?
Not today. Turkey and lamb. We're going for white meat or small harmless animal.
Do the Thompson twins, do they have fun names for their meatballs too? Do they have like a mullet meatball sub or something like that, or is it?
Yeah, no. Well, if you turkey before you have the lamb meatball, it's a Tulum meatball.
That's the Tulum. There we go. See, I knew you'd have something ready for that. There you go. Check out. I wish I could see the Tulum meatball sub there you guys are having for dinner. And also joining me, I mentioned we have a special guest in studio. I am very pleased to welcome back. It has been far too long. Actually, the progenitor of this program. We created it with you guys way back in the day, back when it was VolX. He's the creator of VolX. He's the creator of Real Day. Now he's the founder, chairman, CEO, all of the above maybe, for Demand Derivatives. A very busy guy. Very happy to welcome back Mr. Bob Krause. Bob, welcome back. Welcome to the studio for the first time. Good to see your face here, sir.
Thank you. Yes, it's been a long time, and I am reminiscing about the 100 shows or so that we did in the beginning.
Back in the early days in the croquet court down at FIA Boca and things. That was good ones.
That was memorable. Yeah, we had this great idea, to come up with a volatility show. We loved what you did with it, and we were really honored to be a part of it. And things happened and it kind of got away from us a little bit, but we're still here, still kicking, and glad to be back.
Well, let's get right into it then with our Volatility Viewpoint segment.
It's time to welcome thought leaders from throughout the volatility trading world. It's time for Volatility Viewpoint.
All right, everybody, welcome to the Vol Viewpoint segment, the portion of the show where we welcome on thought leaders from out the world of volatility. And I can't think of anyone I'd rather have on the segment right now than good old Bob, except maybe your cohort, Don. We'll talk about him in a little bit. He's always fun as well. But Bob, like I said, it's been quite a while since you've been on the show. I've been bugging you to come back on for a while. And you keep saying, it's not quite ready yet. We're not quite ready, but now we're there. There's a there, which I'm excited to say. But before we even get to that, like I mentioned, you came on the show in the initial incarnation of VolX. It's gone through multiple iterations since then. Kind of catch us up. What's gone on with the VolX contract? What iterations has it gone through? You have the real day and others. Now you have demand. Kind of catch us up. What you've been up to since the last time we chatted with you. It's been many years now here on the Volatility Views program.
Well, right. So, if you started way in the beginning, you know what realized vol futures are. I mean, we talked about them over and over. But if you're kind of new to the program, it's a volatility futures contract that's based on realized vol, or the statistical or actual vol of the underlying, as opposed to the VIX kind of calculation, which is based on the cost of options. Essentially, they take options models and, back out an implied volatility from that. And then they base or create the VIX index, and then they trade futures and options on that index. In our case, what we do is measure the actual volatility each day for 21 days, or essentially about a month. What that means is, so let's take a simple example just to refresh everybody's memory. So let's suppose gold moved 1% yesterday. Okay, well, which way did it move? I don't care. Okay, we want to know how much did it move regardless of direction. It's kind of like an absolute value function. And over 21 days or so, then we, over 21 days, then we calculate the movement each day and then come up with the answer, how volatile it was over a month, and then we settle our contract to that. So that's how realized vol works. You can obviously go to our website if that didn't make sense, and read up about it, or send me an email and we'll get you all caught up. But we have another product called Real Day. You want me to get into that a little bit? Give
us the full rundown. We want to hear it all, sir.
Okay. So we have real day options, and these are forward starting or delayed strike daily options. And what does that mean? So pretend we're trading an option today for expiration next Friday. We're going to buy an at-the-money option. We just don't know where at-the-money is until next Thursday at the close. So you're getting at the money, you got an at the money, you just don't know where that is. And so where is that? When do you strike it? And that's it on Thursday at the close. And when I say at the close, I really mean at the close. So suppose that it was on the S&P and it settles at 27.45.25. You get the 27.45.25 call for Friday. It struck right at the money, right to the penny, and now you have a perfect at-the-money option that's good for 24 hours. If the arrow is green on Friday, you're in the money, and that's a nice thing. One other point to make about that is you're getting struck at the close on Thursday. If you hold to expiration, you get the close on Friday. You get exact close-to-close exposure. And if you've been a fan of this show or really any other show, you'll know that a lot of portfolio managers and traders like to get the close or get the as close as possible to the close. And with real day options, you can get exactly close-to-close exposure just by the design of the product.
And of course, you have some new announcements. One of the reasons you're here at the FIA Expo today, you had just put out some interesting new developments. Catch us up. What's the latest in the world of real day / demand derivatives?
Right. So we took those two ideas were actually in two separate companies. So I then came up with a new one, which we're still not talking about yet. So we call that Real Globe, but don't worry about it. But the point is that I'm now passing around three cards. So I'm the chairman and CEO of VolX, which was Real Vol, and then Real Day Options, and then this new thing called Real Globe. And it was kind of like we're playing cards because I'm passing out all kinds of cards, and nobody knew exactly who I was representing or who I worked for, So what we did about I guess about a year ago, December, January time, we merged the companies together. So Real Vol, Real Day, and Real Globe all became part of demand derivatives. And so we were focused on that. And we changed the focus of the company not to, a volatility company or a daily option company, but a instrument design company. So we design new derivative instruments. That's kind of where we were focusing our effort. And then if somebody came up with another new instrument design, we could help them get it to market because we knew the market makers, we knew the exchanges, we could get it licensed for them. We could probably help them build liquidity in the product. We kind of had it from soup to nuts in a way. You just come to us with an instrument idea and we can get it patented. We know how to patent those kinds of instruments, which is very difficult, by the way, because a patent is an invention, and an invention is a thing, and these aren't things, in the classical sense of, machines and that kind of thing. So it's very difficult to get a patent, but we have them, and we actually know how to defend them because we had a CME challenge, in fact, 2 of them, and we won both times. But having said all of that, where we're going now is we came up with another instrument called Real Limit. I'll explain that in a minute. But we decided to actually start our own futures exchange, which we're going to call Real Bot or Real Demand Board of Trade, Real Bot for short, and then Real Demand Clearinghouse or Real Clear. So Real Bot and Real Clear are our exchange and our clearinghouse. That's how we're going to exploit or monetize these ideas. And now that we have 4 of them, especially with this latest idea called Real Limit, we think we have a real winning combination to actually start our own exchange and not just license. When we had Real Vol, Real Day, maybe we could have started an exchange. We kind of toyed with that idea for a while, but ultimately it was, we better just license and, see how it works and just get it out there and that kind of thing. With this new idea called Real Limit, we are definitely and 100% behind starting our own exchange. And then instead of licensing, we're going to put Real Vol, Real Day, and Real Limit on our own exchange and cleared through our own clearinghouse. So that's it in a nutshell. That's where we're going. And so now your big question is, what's Real Limit? And Real Limit are limited risk futures contracts. How did we do that? Now, you have to understand, and most people do, but that all futures contracts have unlimited risk. You could sell it at 100, go short at 100, and it could go to 1,000. It could go to 1,000,000. It could go to 1 billion. We've never had it go to infinity yet, but, theoretically it's possible. Well, to secure an unlimited risk position, you need an unlimited amount of money. And we know that's not possible. So I started thinking about this huge risk in the marketplace. I remember Warren Buffett saying that, derivatives are weapons of financial mass destruction, right? And I'm thinking about that. And, you don't say that kind of stuff to an entrepreneur.
Hasn't stopped him from writing puts all the time.
That's right. But you don't say that to an entrepreneur, like this is the thing that's going to cause the destruction in the world, because I'm going to start thinking about, well, what about it is going to cause the destruction of the world? What feature does that? And when you're an entrepreneur, or I guess when you're thinking the way I do, I start pulling things apart. And when somebody says it can't be done, or this is going to cause the end of the world kind of thing, I'm like, well, okay, we got to solve that problem. And I came up with this idea called real limit, which is limited risk futures. And I think that you guys will really like the idea. So it's, when I say that limited risk futures, most people think of notional limited risk, right? If we're talking about, let's say, a $20,000 corn contract, everybody kind of immediately jumps to, so I have to put up $20,000. That's never going to work, right? But that's not the idea at all. Okay, so let's suppose that we are trading a corn contract. Let's say it's worth, or it has a notional value of $20,000. But the most I want to risk on this position is $1,000. So you post $1,000, and what we will do is match you with somebody who's willing to post or risk $1,000 on the other side. Okay, so your maximum loss is 1,000, but your maximum gain is 1,000 because your partner or your match, has the same equal and opposite exposure as you do. Okay, so that's the initial thought, and now probably lots of questions come to mind. So let's first start from, okay, we're not going to hit the limits. We're going to trade in between the limits. So we have this $2,000 limit, 1,000 up and 1,000 down. So essentially 5% if it's a $20,000 contract, right? So we got this 10% range. And if we vary within that limit, then variation margin flows between our accounts just like it does now with futures, okay? So, the market moves up $500 worth, right, or whatever the number that means, right, times the multiplier. But let's say $500 worth. So $500 will flow into Mark's account, and then the next day, it starts heading down again, and 250 flows back into my account. So if we don't hit the limit, future or real limit futures act just like standard futures, and we go along our merry way. If we move up enough or down enough to hit the limit, then what happens is we go through early expiration. That's what we call it, an early expiration. So on the day that it hits the limit, all longs pay all shorts, or vice versa. The contract expires. There's no more trading that day. And
so if it hits in the first 30 seconds, that's done.
Then we're
done.
done.
Okay.
We're done for the day, right?
It's effectively limit up, limit down, like they have in
Exactly. So yeah, right. If it happens, the first tick or whatever, then all the longs win. All the shorts lose, or vice versa, and we go from there. We go from there, meaning we don't do anything, right? There's nothing else to do. You cannot trade that day. However, tomorrow morning, what we will do is reopen the contract with the same original expiration date, which could have been, 3 months from now or whatever, with an open interest of 0, just as if we were listing from square one. And so we've effectively capped or limited the loss or the risk to a futures trader, anybody taking a position. Yet we're still allowing them to gain or manage their exposure all the way until the contract expires. So that's basically how it works. There are still questions about exactly what that means, or what can you do with it. And one thing I thought of was kind of, okay, consequences. Like, okay, let's suppose, for instance, that I'm long, Mark is short, and, same $1,000 on each side. And today it moves up $500. So I make $500. Mark loses $500. And now he wants.
I already don't like this example.
Yeah, right. And now, what happens? He wants to hold the position the next day because he thinks it's going to turn around and go in his favor. Mark has to post another $500 to hold the position for tomorrow. If he doesn't, then we blow him out of the position, just like an FCM, a futures commission merchant, would blow you out of your position if you don't have enough collateral. So you get blown out of the position, or you come up with another $500. Let's say the next day we move another $500, right? And against you, Mark. I know it's your.
I'm going to hang up on you now, Bob. If you or just cut off your mic here because you're in studio.
And so now I'm up 1,000, right? I invested 1,000. I'm up 1,000. I have $2,000 in my account. And Mark lost 500. Then he posted another 500. He lost that 500, and now he has to come up with another 500 to hold his position again for the next day. So the $1,000 really moves every day, right? It's not like an option with a strike price or something. I guess it has an option flavor to it, but it really is a futures contract with a limit. But that limit changes every day. We have a $1,000 range each night or each day, and you have to come up with more margin, every day to cover that. What's the consequence, which is what I was talking about? This is kind of cool because it's like a trailing stop, right? Now, I just made $1,000 out of this trade. I invested 1,000, but I made 1,000. I have 2,000 now. And what happens if it starts going against me? Well, if I don't re-up, if I don't put in any more money, I get blown out, and I essentially made $1,000. It's kind of like a trailing stop. And if we keep moving up, and Mark keeps losing, and I keep winning, the most I'm going to retrace is the $1,000 that I put up, because I'll get blown out before that.
I like the concept because it's got the simplicity of a binary, but it's not a binary because it can trade in between, right? The binary is going to be 0 or 100, and that's kind of it. Where it settles out. This can settle out in between the maximum limit, so there's a little bit more granularity. So it's got maybe the simplicity of a binary, but more of a trading range or settlement range really they could have at the end of the day, which I think is attractive for some people. Yeah,
and it really is a futures contract because even a binary option has some kind of limits, right? That stay, right? They're stuck, they're fixed, or whatever. And in this case, as soon as the next day comes, we got new limits, a new $1,000 range, and so we go from there. So it really is a futures contract. Now, the next question many people think of is, well, what if my opportunity is much bigger? Why, I don't want to limit my upside to $1,000. Well, okay, so invest $5,000, right? Now we'll match you with somebody who's investing $5,000 on the other side, right? And now your upside is much bigger, but also your risk is much bigger because now you have $5,000 in that trade, right? So if we did this on a pure custom basis, where you're now trying to figure out the price, the quantity, and the margin, I think that would get a little too complicated. So what we settled on is 3 levels. There's a small, medium, and large size. And we determined the sizes actually through volatility and our historical analysis of data and all that kind of stuff. But then after we determined what we thought the optimal levels should be, we then looked at the margin for the original contract, the ongoing contract. In this case, it was the CME if we were talking about corn, right? So how much is corn. Now I don't remember what the corn margin was, but just I'll throw out a number. Let's just say it was $2,500 to invest in an unlimited risk corn contract, right? It turned out that our middle margin, based on volatility and all the data that we did, came out to right around $2,500. So you could think of the 2,500 CME margin as roughly our middle of the road kind of medium margin level. The low margin level was half that at 1,250, and then the high margin amount was about double that, or 5,000. In other words, what I'm trying to say is that it's a limit without limits, right? If you invest more money, then you get a bigger range, right? If you invest an unlimited amount of money, then you can have an unlimited amount of risk, so it's a limit without limits, really. And we just decided to offer 3 to start, and we'll see where it goes. If people really like the idea of low initial margins, we could make it, $100 if people really wanted it, but they'll get stopped out or whatever very quickly, right? Because, just simple moves could lock out the contract, and then we don't trade anymore for that day. But the point is, we can make those margin levels really anything that we want to cover an unlimited amount of risk or a small amount at a time. So we settled on those 3. Low, medium, high is roughly half CME, equal to CME, and double CME margins for, in this case, corn contract. And what we want to do in our exchange is launch on the what I call the king assets. The king asset is the highest volume asset in each major asset class. So in metals, that would be gold. In energy, that would be crude oil. For commodities, that would be corn. Then the euro in the FX space, the 10-year note in rates, and the S&P or some derivative of S&P in the equity index space. So what we plan to do is launch Real Vol, that volatility product we mentioned, the Real Day, those daily options, and this new Real Limit or this limited risk futures contract on those 6 assets to start on our new exchange. And that's where we're going. So we'll have 3 instrument designs on 6 assets. And that's the focus of our new exchange. It should appeal to any, let's say, any futures trader with real limit, giving them limited risk. It should appeal to, volatility and option traders with the vol. The Real Day should appeal to, option traders. And then no matter whether you're, let's say, an energy trader or you're a metals trader, or you're an FX trader, we'll still have at least one and the major one asset that we'll be launching on. So that's the focus and the goal of our new exchange.
I have a bunch of questions, and Mr. Meatball has a bunch of questions as well. I've been holding him at bay long enough. Mr. Meatball, what do you got for Bob here, sir?
So I'm interested in how you're going to match liquidity, because that seems to me the biggest piece of the pie that you guys have to figure out. So, how are you going to match real limit buyers versus real limit sellers? How are you going to get people to align one way or the other? What incentives are you using to get people the market? And really, I think that's the $1 million question. How are you going to get liquidity there? How are you going to match buyers and sellers?
Okay, so I see those as 2 big or different questions, and let's start with, okay, the market's working. How are you getting the right price, so to speak? How are you finding buyers and sellers? Well, I think that there's a natural arbitrage with the unlimited risk version market, right? We're not going to be displacing regular futures contracts, at least anytime soon. And, you're going to trade a real limit, say, corn contract not you or not most traders will, but certainly the market makers, Goldman Sachs, the investment banks will be watching to make sure that real limit is in line with the unlimited version or the standard futures. As far as building liquidity, right? That's a $1 million question, right? It is tough. Anybody starting a new market knows that's a real heavy lift. But I think in this case, it's going to be a little bit easier. Certainly not easy. I would never characterize this effort that way. But it will be easier because we do have a open liquid market with a perfect hedge, right? Perfect up to the point that it's you're hitting the limit, and that takes some fancy footwork. But as far as hedging and trading, certainly when you're kind of in the middle of the range there, that's not gonna. You're going to have the maximum liquidity, because even if there's low volume in ours, I bet you would still have large size at a narrow bid ask, because the other liquid and very liquid market exists.
So you're not worried about maybe like a bias, like let's say back when they tried to create, what was it, VIX up, VIX down. They're trying to create like, a tradable version of cash VIX. There's a clear bias to VIX trading, right? People want to be on the upside, not on the downside volatility space. So they had to create all these obtuse incentives to get people to take the other side of that trade, and it ended up not working out. Are you not worried that some products will just have a clear pattern to their trading, right? People want to get long XYZ future and not short it, or vice versa. So you have to come up with some interesting incentives to get on the other side. Is that something that worries you guys, or is that kind of down the road a little bit for now?
It doesn't worry us, and it's not down the road. I don't think there's going to be any bias to real limit for sure. We discussed this, ad nauseum with our strategic directors. I mean, these guys really understand the markets and the structure of markets and strategy of markets. Don's been on the show many times.
Who are you talking about?
Don Schlesinger.
I still invoke him whenever, anytime anyone comes on and starts talking vociferously about buying options. I say, Don's out there somewhere listening. He's gonna let you know. So yes, I know Don very well.
Exactly, but he understands the markets very well, and many of your longtime listeners will attest to that. He's very good at that. But we also passed some of these ideas past some very powerful, very well-known academics in the field. We also passed it through people at the Federal Reserve, for instance. So we're trying to make sure that there wouldn't be any bias, that this was designed correctly. So far, nobody's been able to, poke holes in it. All of my designs have been that way, that after, I don't release it until I think it's perfect. And that's another reason why I don't want to tell you about Real Globe right now, because I don't think it's perfect. We're like 99% there. It's almost ready to go, but it's not perfect yet. And so that's where I'm at. And so far, nobody's been able to poke holes in any of these ideas, whether they be real vol, real day, or real limit, as far as, not working, or that's never going to work, or, there's going to be a huge bias here and you're only going to have one side, or that kind of thing.
We have a bunch of people have come through here, sat in that chair recently. A lot of them in the crypto space, talking about how they're going to launch new exchange X for, crypto derivatives is usually the thing they're here to talk about, but some other variation. And a lot of them are still going, even though they have a nuanced new exchange, a lot of them are still going the traditional model of going out and effectively selling pieces of the exchange, right, to the liquidity providers and the order flow providers. It's the old model. Everyone's done it. Amex, most of the major exchange groups have done it, to give those groups table stakes, right? Give them an incentive to route flow to that exchange. Is that something you guys are considering, or you don't seem too concerned about liquidity providers? So maybe you have some secret sauce up your sleeve that you can whisper it to me after the show.
Well, it's something we're very concerned about. We are constantly. That is the heavy lift. That is the hardest part out of this whole thing. I can create an exchange. I can. The technology exists, that we can put that together. We can get the DCM license. It's getting buy-in. And you can't just get one group buy-in. You can't just get buy-in, they want to see how it is kind of thing. Yeah, I'll be there as soon as it's working. Well, but I need you to make it work kind of thing, right? It's the chicken and egg thing. I need to get everybody there on day one. That's the real heavy lift. It's like herding cats. You get somebody and then they're like, well, I changed my mind, and, they jump out of the bag kind of thing. So, that is the toughest thing out of all, is getting everybody there on day one. But with this product, with real limit, the fact that we're opening on the best assets, and the fact that we have other instruments, right? It isn't just real limit. It's not real limit on one asset. It's real limit on several assets. It's real vol on several assets. It's real day on several assets. We have the product breadth and the asset breadth to attract all the participants, and that's what we need. Now, we obviously won't get all, day one, but I'm going to be able to appeal to every group, and we are going to get, I'm confident that we are going to get early adopters kind of in each group, maybe, some of the early adopters playing real day, then, a couple early adopters playing real vol, and et cetera, et cetera. But together, I think we're going to make this work.
And you're out here, obviously, at an industry conference, FIA. You guys won Innovator of the Year award not too long ago at this very same conference. So you're doing kind of a little show and tell here this week. What's the response been like from the firms you're talking to so far? This is obviously a good time to be talking about a volatility product, given the fact that we actually have a little bit going on in the marketplace right now.
Yeah, so a lot of people, I gotta say, when they walk by the booth, they've never seen us before. They certainly never saw the company name because it's new. And we have up there in blazing letters, revolutionary exchange, reduced risk clearing, and that kind of piques people's interest. But what is that? What does that mean? And that's the goal of the booth, right? To get them to stop and ask questions. But they ask questions, and I say, "Oh, well, we're starting a new futures exchange," and they go, "Oh, okay. Well, good luck with that." No, you don't understand. I think we have a way to a path forward. And they go, "Oh, okay. But it says, wait a minute. It says you're starting a new clearinghouse. Good luck with that. That's never going to happen, right?" So we're met with lots and lots of skepticism. But when they listen, then they're like, "Oh, yeah, I see how that can work." And then, "Oh, yeah, I see how that can work. Oh, yeah, I see how that can work." Yeah. And essentially, I'm not going to release it until I have all the pieces. And that's what, Mark's been bugging me for 2 years. "Why don't you come on the show? Why don't you come on the show?" I'm like, I'm not ready yet. I'm not ready yet because all the pieces weren't there. Now all the pieces are there. It will work. We have a path to fruition, whatever you want to call it, path to launch, path to success, and we're going to make it work. So what else can I say?
Mr. Meatball, any final questions for Bob here before we roll on into the volatility review, sir?
The liquidity piece is interesting. And then, what about if I want to keep a position open and the other side doesn't? The way you've matched it up. What would happen in that scenario? I provide more liquidity. The other guy says, I'm going to take my money. What would you do? Does the contract go poof anyway, and the guy just has to find a new matchup? How does that work? And is it a direct relationship, or is it kind of like how when you trade, is it a true party counterparty, or is it just more like an options clearing where it's, everybody's on a wheel, that type of stuff? The clearing piece, the clearing and matching is still a little bit opaque to me.
Okay, so two things. One is it trades just like futures, and it's continuous, and it would be just like any other futures contract. So, when you want to get out early, you try to hit the ask, or sell at the market or whatever, and you effectively transfer your risk to somebody else. And as soon as you're out, then you're out, and your capital gets freed up. So I hope I answered that question. The clearing part we never got to, but if you give me a couple minutes to explain, Mark, are we still okay?
Sure.
Okay, good.
You have 8 seconds. No, I'm just kidding. You get a couple minutes, then we have to get to the vol review.
Okay, good. So on the clearing piece, if you were going to start a clearinghouse in the standard manner today, it is impossible. I would never say that as an entrepreneur. Nobody ever comes to me and says it's impossible, because I say, no, I'll figure it out. It is impossible to start a clearinghouse today in the standard manner. But I've figured out how to do that, and the answer is really real limit futures. And where that comes from is we now have a fully collateralized instrument. You cannot lose more than the money you put up. And because of that, then you don't need this array of clearing firms that are, in this mutual offset system, who are guaranteeing each other's trades. You don't have this capital guarantee fund with, billions and billions of dollars in it that are at risk, but they're only paying, the risk-free rate to the clearing members. I mean, I do know of a company who has more money than God, who is trying to get in the clearing space. They could have thrown $1 billion into this, and they concluded, even if we threw in $1 billion, set it all up, just like the CME or OCC or somebody like that, it's still not possible to get a clearing firm, a clearing house, established today. It isn't because of regulations. It's just because of the structure of the way it is. We are sidestepping all of that. 90% of what a clearinghouse does, essentially auditing their members, making sure that they're sound, having the capital guarantee fund, making sure the net movement of capital happens, and even risk modeling, trying to figure out exactly, how much risk and how much margin we should charge. All of that stuff goes out the window. We don't need any of it if it's a fully collateralized exchange. In fact, it boils down to a simple accounting function. We could probably do it in a spreadsheet if we had to. So we are able to save, 90% of the cost. I don't know the exact number. I'm just throwing that out. But a huge amount of the cost, because we don't have those kinds of overheads, because the instrument that we are going to clear is fully collateralized. And because the clearinghouse that we are establishing is for limited risk or fully collateralized instruments only, we're going to convert real day and real vol to a fully collateralized product.
We have to clear our way on. You can rest your voice for a minute, Bob, as we clear our way on to the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the volatility review.
All right, everybody, welcome to the Vol Review, the portion of the show where we break down the week that was and indeed still is from a vol trading and trending perspective. And spoiler alert, a heck of a lot of vol going on in the space right now. As we're recording this here and streaming it live, coming up on 1 p.m. Central here, the markets are kind of in a tizzy. They can't really figure themselves out today. They were up strong, then they kind of gave a lot of that back. Now it's like we're kind of trending back in the upswing mode again. Most of the major indices up right around 0.5%. S&P a little bit close to that, up about 0.4%. tech-heavy NASDAQ up about a similar percentage. The Dow, everyone loves to quote the Dow these days because there's so much points going on in the Dow, even though no one trades it. But that's a conversation for another day, up about 0.5%. And the VIX cash, at least, taking a bit of a break off about half of a handle or so. Got up as high as a little bit north of the 20 handle today, about 2061 right now, right around 1965 or so. So, Mr. Meatball, has been a lot going on the vol side. The vol giveth, the vol taketh away, the vol is back again, the vol's off. I know I was liking it a couple of days ago because I know Mr. Rock Lobster was not buying my prognostication from last week that we were going to hit about a 17.5 handle, and we hit that. For a couple of minutes there, actually about a day or so in the middle of the week. Then we shot back north again. Now we're about 1964, so still not looking too bad. But what's been catching your eye this week from a vol perspective, sir?
I think the movement that we're seeing, there is a lot of movement. Vol has not been cheap on any level, and it's been kind of fascinating the way we've just kind of died. So I mean that's kind of been what I think is most interesting. I don't know what are you seeing anything especially kind of odd? VIX futures are high. We're in bouncing between backwardation and contango, and I think that's probably the biggest key. But that's really about it.
Yeah, the futures right now hovering right around the cash, like I said, right around 1960 odd. We got the futures about a little bit more than a handle shy of that in the front future. 2 months out, you're about a point and a half or so below that. So right now we're backward, but again, give it a few minutes. That could change here. That's been part of the issue. People are waiting for that backwardation to go away because that means maybe some of the technical term, the spookage, has maybe eased out of some of the market out there. We had a bit of a range out there in VIX cash land from down to about 1706, which was looking really good for my crystal ball prediction, up to about 22, almost 23 on the upside. Our old friend VVIX, aka the volatility of VIX, still robust, right around a 115, but that itself is still 10 handles lower than where it was last week. So we're not quite in this tumultuous, frothy period like we were a week ago. And Bob, I know you're a fan of all things realized volatility. The realized volatility of VIX. So that 5 times fast. I know that's an offensive concept to you, but the realized volatility of VIX right now hovering right around a 164. So 30-day realized, of course. So just completely crazy. Does that make your hackles go up, Bob? When I say that, the realized volatility of VIX, does that just make you angry?
Yeah. Well, I don't know what. Well, I don't know what that means. Really?
You're right. Theoretically, it's a concept. It's a good debate we could have. Unfortunately, I don't have time for that debate right now, but I knew that would get a chuckle from you if I were to say something like that. In terms of what's lighting it up out there, VIX options have been lighting it up this week, but not quite as robust as they were last week. Last week, it was well over 1 million contracts every day as we were kind of in the midst of this frenzy out there. This week, a little bit quieter, Monday being the big day, 1.3 million contracts on Monday. Tuesday, a little bit shy of 1,980,000 contracts. Wednesday, 662,000 contracts. Thursday, 408,000. And today, so far on the tape, we have 383,000. So a little bit light. The ADV right around 576,000. That's up about 30-odd thousand from last week. And in terms of where people are playing out there in VIX options land right now, otherwise known as our top 10 hot VIX strikes, the big open positions in VIX land right now. Let's go from the bottom this time for fun. Number 10 are the Nove 22s, 147,000 contracts over there. Number 9, the Dees 17s, $1.55 open there, followed by our going from the bottom, our first put on the list, the Nove 14 puts with about 159,000 contracts. Number 7, the Dees 37 halves. Talked about those before. That's an interesting strike, a bit optimistic, but didn't get too far away from that one in the big froth of a few weeks ago. 163,000 contracts open there. Number 6, the Feb 37 half. So a lot of love on 37 half strike across the board. 171,000 there. Number 5, our second and final put on the list, from the bottom at least, the Nove 13 puts, 13 strike, always getting some love. 173,000 contracts there. Number 4, the Nove 21s, 178,000. Number 3, The Nove 26s, a $1.98. Number 2, the Nove 30s with 203,000. That's a relatively more recent addition to the Nove 20s and 26s have been part of that big spread we've been talking about for a while there. Number 1, no spoiler there. The Nove 20 call still taking the top spot, about 250,000 contracts open there. About 6.5 million total outstanding, about 4.9 million on the calls, and about 1.6 million on the puts. Mr. Meatball, I've been running around at FIA and talking to people here in the studio all week, so my ability to parse the various threads of VIX options going up this week has been limited. Anything coming across your tape, any shows or trades you thought were particularly interesting or resonant this week, sir?
Yeah, there's been a ton of paper, actually. Kind of the big one that traded today was the VIX Nove 2020 DEES 22 call spread. Paper sold that at 7. We're seeing a lot of trading back and forth at downside. Saw a bunch of November put buyers, a bunch of December put sellers. It's just been a whole host. With vol kind of up here now, there is a Nove 1x2 call spreader that is buying 1, selling 2 in what is likely the least shocking trade of the year because of taking advantage of that high VVIX. And then, it's been interesting. On the down days, we've seen a lot of call buyers for VIX, and on the up days, we've seen a lot of call sellers. So just kind of a really interesting setup.
Let's get to our old friend, the product a lot of people out there like to trade, the predictably crappy VXX as well. We'll do a real quick rundown of this one, hovering right around 34.5 right now. It's about a point lower than where it was this time last week. A couple of weeks ago, of course, it was well shy of the 30 handle, so a very different narrative here this week. A pretty active week. It's averaging about 273,000 contracts. Did almost 2x that, 521,000 on Tuesday. That was the big day this week. The rest of the week, most of them pretty much, actually all of them except for Monday, were north of that ADV. Mark, if I told you right now, that put you out on a limb, and I said, take a guess, take a wild flyer on what you think is the number 1 open position out there in VXX options right now, what would you say, sir?
I'd say the 10 puts in January.
I see they're offered at a penny right now. You could get all you want, sir. You can go to town on those.
I know. I've got what I need.
There's always room for more. There's always room for more of those. Looks like those are holding steady at 203,000 contracts, by far and away the most dominant position out there in the VXX. Let's doing a quick scan here of our top 10 hot VXX strikes as well. See what people have been lighting it up. Most of it's pretty much the same. 15 puts getting a little bit more activity this week, up to about 82,000 contracts open. Aside from that, it seems to be all the standard fare out there as well. I guess we should probably keep rolling on. I don't think we even have time for any listener mail. I apologize this week, listeners. We'll get to you next week. Really quickly, Bob, before we roll out the volatility review, I know obviously you're disseminating realized volatility indices. Have you noticed anything interesting in those indexes over the past week or two as we've been moving all over the place? Any interesting developments in the world of realized volatility you want to share with our audience here really quickly?
No. So sorry about that, but I haven't been keeping track of the volatility indices, especially over the past week, because just been, here at the FIA show and, talking up demand derivatives as much as possible.
You've been doing booth duty. I get it. Someone's got to look good there at the front of the booth there. I get it.
Exactly.
I just wanted to give you a chance because we talk realized vol here a lot, so we want to give you a chance to chime in. We'll keep an eye on those indices, though, as we keep on rolling into the most challenging part of the show. Bob, you're welcome to play if you like. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the Crystal Ball. This is indeed the portion of the show where we embarrass ourselves week after week trying to guess where the slippery pig known as VIX Cash is going to be, where the volatility gods, where their whims will blow us this time next week, right at show close, right around 1 p.m. Central here. And I know Mr. Rock Lobster was not a fan of my prediction last week, but I was feeling a little bit of downside, and that's exactly what we got. I was at a 1765, which was looking so prescient until about 24 hours ago. We're still close. Actually, it just ticked down. We're at about 1965, so exactly 2 handles off. So not quite the bullseye I was hoping for, but still a heck of a lot closer than the Rock Lobster's 26.01. Or I forget, was that you, Mr. Meatball? I forget
What?
who picked 20?
That was not me.
That was yeah. He was picking 26.01. So he was giving me a hard time, but I was fading that. So I think in
I think that was a good fade.
So he was playing Russell last week. He was playing Russell by all the vol last week, and I wasn't feeling it. So I think I'll take the win just for pride's sake. Even though 2 handles away, it's not. I usually think of a 1/10 of a point being my crystal ball pick. So I'm going to go first for next week, and I'm going to keep. We're at about a night, almost exactly 1965, so about 2 handles exactly from where I picked. But I'm kind of liking those levels still. I think we can have some more frothy moments, obviously, that could spike us back over 100 or so over 100 over 20. But I think we'll be done. I'm going to pull a meatball and keep pretty close to where I was this time last. I'm going to bump it up a little bit. I'm going to say 17.75 for this time last week. Next week, I should say. Mr. Meatball, are you feeling what your cohort's feeling? Are you going to tell me like a 29, or are you feeling more of the fade, sir?
So I'd like to actually buy the 25-15 strangle.
15, wow.
15.
I know. Still, you're feeling
25-15 strangle.
No, I know what you said. That's some squeeze on the downside there. Are you feeling that much?
Yeah. So I think by this time next week, we're either going to be in a face-ripping rally or it's going to be real ugly. That's the way I feel. But since I have to pick one, I'm going to say 16.25.
Wow. Fading me and fading your Rock Lobster. He's not going to like that, sir. He's going to take some umbrage to that, I think.
Well, he's
26. 26. He did add the addendum of 0.01 there to make it a little bit not as crazy. 26.01. All right. That's going to do it for the crystal ball. Bob, I'll spare you, unless you want to play. You're free to play. But I will spare you the indignity of having to wager as we keep on going. That's pretty much actually going to be it here for the old program. Let's just flip. There we go. That's what we were waiting for. That music, unfortunately, listeners, means we've come to the end of another epic journey through the world of volatility. You talk a lot about realized vol and all the things you have going on there, Bob, the demand derivatives, the various products therein. So, Bob, if listeners are intrigued, I'm sure a lot of them are, they want to learn more about the products, they want to see what's going on, maybe they want to check out the specs, maybe they're a prop trading firm, they want to make markets in this, or maybe they're listening in this, and they got some cash, and they say, hey, man, maybe I want to get a piece of this demand derivatives action. Maybe I want to invest in that thing. Where should they go? What should they do, Bob?
Well, to get more information, they go to demandderivatives.com. And it's a very simple, laid-out website, and you can, just click on download brochure, and there's one for each one of the products, except for Real Globe, like I mentioned earlier in the show. That's that one we're still keeping under our hat, but you can download the brochure for Real Vol, Real Day, and Real Limit, and read up on that and really understand kind of the specifications and what we're talking about there. As far as, if you're a market maker or you're a big trader and you really like the idea and would like to kind of sign up, we are trying to put together an incentive program, especially for market makers, to provide liquidity, and love to get some input on that. As far as investing in our company, I don't know what I can say. That's all regulated by the SEC, but, I'll have to leave it at that. So...
Hit the man up, Demand Derivatives. I almost said Duran Derivatives would be cool too.
Yeah.
DemandDerivatives.com to learn more. And maybe you hit them up. Maybe if you want to get a piece of the realized volatility action, you could check it out. But Bob, it was a pleasure having you on. I'll have to get you back on again. Maybe we'll beam your cohort on, Mr. Schlesinger, on as well. I haven't heard his voice in a long time. That would be refreshing. He could chastise me for talking about buying vol. It'd be great. It'd be like old times again. I would look forward to that. But DemandDerivatives.com to learn more. You also have, I believe, if you want to follow him on the old Twitter machine, it's at RealVol_indices. It's a mouthful of a handle, but it's out there. You can get some data over there as well. Give them a follow over there while you're at it. And last but not least, Mr. Meatball, folks are intrigued. They want to learn more about this VIX trading thing. or indeed if they want to learn more about what's going on in Carmen line, they want to buy some VXX downside, where should they go? What should they do, sir?
Yeah, so if you're interested in a smarter way to be long the S&P 500 and you're a qualified investor, feel free to reach out to me, market option at carmenlinecapital.com. So during this whole mess, we've been mostly hedged, which has been kind of nice. And then if you want to learn to trade yourself, you want to become an expert VIX trader, you want to work with Kramer's VIX guy, best VIX guy, then
I won't hold that against you at all.
Check us out, marketoptionpit.com, and shoot me an email, and I'll give you a 2-week trial of our services.
There you go, marketoptionpit.com. We're going to check out optionpit.com to learn more. And on behalf of Bob over there and the whole crew at Demand Derivatives and Mr. Meatball, let's give the Rock Lobster some love as well, even though he was wildly off in his prediction from last week. I won't let him hear the end of that. And indeed myself, I want to thank all of you for downloading, streaming, subscribing, for listening live. We love you guys too. Sorry we didn't get to your questions. We got a bunch. We'll do double duty on the questions next week. And we'll see you then for more Volatility Views.
Volatility Views is brought to you by Cboe. Cboe is one of the world's largest exchange holding companies, and we're inspired every day to innovate some of the industry's most powerful products, technology, and solutions. We're the industry's leading force driving access to global markets. A better trading experience and powerful data and analytics to inform better strategies. We're committed to engineering new ways to help our customers realize their potential and navigate the marketplace of tomorrow, today. Visit Cboe.com. That's CBOE.com to learn more about our expanded offerings.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.